Good morning, everybody. I was just updating the SPX thing there. All right. Get some charts up here. The markets held on to that big gain yesterday, and we really got to look at SPY to put it in perspective as to the gap and what really moved there. But we can see the strength here. I'm not some of the overnight data, but kind of just mark time for the most part. After that, it's up a little bit more here today. It's a little extended at this point. We're looking at the futures and we're going to look at SPX and such. So, as much as this moved, I guess the pain, if you will, of what preceded what happened. I'd say, well, what was the pain? Well, the pain was dealing with this and some of this. Right? As the markets mark time going nowhere, that choppy price action where there were individual stocks that were moving along, but there were also many more erratic type of failure patterns. And so this is something that I didn't discuss it completely with Dan, but one of the things that we over the last year, this programmer took like freaking forever to get things done, and I guess we didn't give him the most direct directions as to what we wanted. But we pretty much got completed, like for us to be able to look at the back end of trades. Like you can see all the trades that are there when you log in there, but we're able to manipulate the data in certain ways to be able to look at batting averages and Sharpe ratios and, um, of course, losses and wins and so on and so forth. And the reason I'm saying that is that, you know what, when I think everybody knows this instinctively, but you're trading on day-to-day basis and doing what you're doing, and then the market environments that kind of change a bit. And so while you're doing the same things, the same patterns, all of a sudden things stop working. You start experiencing these whipsaws and losses and such. And of course, that affects your performance. And it also affects your thinking. And so as things begin to change, well, as they are now, and then we've got these so many different patterns out there that are had these big moves, but have presenting us with tremendous opportunities as these patterns consolidate a bit. And so I'm just sharing some of that experience because no matter how long you're doing this, you're going to go against market environments that change from time to time. And when, these kind of patterns that are erratic like this, and sometimes they're not so obvious that they are becoming, grinders, if you will. And what are they grinding? Your account or you. So money management is so key to surviving a grinder period and keeping losses that are manageable. And then the psychological part is that you cannot take the past into the future, so that as things begin to change, you have to go with, because there are periods where you look, for the most part, we don't know which trades are going to work and which ones aren't going to work. And I say that in a certain way to say we know the quality patterns, and we know ones that are like no brainers, and we know the ones that are like, but a lot of the ones that just have used the, in the right market environment, they work tremendously well. Right. So bottoming patterns and so on. So I just wanted to share that with you, is that because look, we had great, periods where things are working out really well. But for there's so many that come that are new to this, um, sometimes these string of losses is you, right? Or us. And sometimes it's the market environment that's just grinding you up, and recognizing that as fast as possible, of course, But in addition, if you're not utilizing a money management for your account, grinding periods can take you out of the game. Right. So my moment of sharing some information that hopefully will help you. All right, where are we at today? Up a little bit more. It's a huge move in a short amount of time. It's likely to rest. However, look, yesterday, this is part of what I teach in the gap course. In that, look, you see a bar like this, it's like, my God, how much more can that possibly move? Well, theoretically, it's not going to move like that again today. However, when we look at a higher time frame and we look at how prices moved, and this was a big light bulb moment for me many, many years ago. It's like, here's a bar and you see another bar that looks just like it, right? Well, one bar went like this. And then another bar that looks on the daily time frame looks exactly the same. It went like this. Now they both look the same, right? When you look at it from the higher time frame. Now that's not supposed to be red because we're talking about green bars, right? They're not supposed to be red, but you get my point. From the daily chart perspective, they both look the same. So what we have here today, and it's not totally flat, but see if I can get that drawing thing here. Well, that was like the end of overnight. I'm just pointing out to you a concept here where you look at daily bars and they can form in different ways. And the one that's like this has a greater potential to keep going up. So there's something that to consider when you're looking at these bars like that. Right? So can this hit 6,000 today? Yeah, of course. It's holding up here. And you'll see that the SPX strike is a little bit above that today. Right? NQ's underperforming, but they're up here a little bit. They took out the highs. And a little sideways and a little breakout there. It looks like it's going to go higher. The weekly chart just been chopping back and forth here, but it looks like we're going to get a bar, and there was bottoming tail bars there. Yes, we looked at, and the Russell. Now that was an amazing move, and that's very encouraging for the broader markets that these speculative stocks have now joined the party. It's a vote for confidence that the markets will go higher. And so speculative stocks, biotech stocks, those kind of stocks, money flowing into them is positive. And as we look at IWM here, WM, you see for the most part, it's been doing nothing this year, actually a couple of years, kind of grinding its way, and it's up at resistance now. So that looks like it's going to need a little bit of a rest, possibly. But it's made a big move. It's up at resistance, got a big rounding bottom there. So that is definitely something for going into next year. Mid caps, kind of went sideways there for quite a long time. So we've got this broad market participation. And with that, we need to take a peek at our internals. So during this time here, this was like, all right, a little bit too much excitement, and things then begin to deteriorate a little bit as far as breadth. They were still buying calls over here, so we needed to see some bearishness come into the market, and that occurred. This is the total put call ratio. This is equity put call ratio. Breadth had already deteriorated a bit, and so not that we had a perfect alignment there, but the odds were increasing, forgetting about the news and the election, which is virtually impossible to do. should live in a cave with no news. Things were getting better as far as our internal market gauges go. And then here on this day, there was a big, it could have been hedging, but a big move toward buying bearish bets. And we know what happened from there. So we're kind of neutral as far as internals go here. So we don't have a signal here telling us that, hey, you know what, you better back off from the longs. But it's kind of difficult until we get a pattern, some continuation pattern, where we look for things that are beaten down, right? Catch up trades. So the markets still have the potential to go higher. They probably just looking at stock, charts like this, they probably need to do a little backing and filling, and see what happens after today, after the Fed announcement, where we go from there. Q's didn't as big of a gap. Tech didn't participate as much, but look, they had, they've been doing great for a couple of years. Let's just take a look at the Dow, which made a monstrous kind of move. But here you can see that basing action, the gap up and just sideways all day. So when we see that and we see this bar and think like this thing can't go any higher, well, it spent several hours doing nothing, so maybe it can. But if it breaks down below these pivot lows, that would be a short-term bearish sign. It wouldn't be any kind of a huge bearish thing, but when it's gone sideways like that from an intraday point of view, if it closes below here, that leads us to believe that it could come lower, and it's going lower to where? Well, we take this line, and what was resistance becomes support. That's your minor support. It's in the middle of this bar, about 50%, which we always eyeball, about 50% of a wide range bar that it could dip down to and see if it comes back up again. And you can just take that and apply it to the other charts, and you have a line on your intraday charts as a reference point. Okay. Transports finally participated. They broke out. So the old Dow theory idea, transports moving up, Dow moving up, finally moving up. Is this a new bull market? Kind of hard to get your head around that. But look, the last time we were firing on all cylinders, we kind of shot ourselves in the foot in a way, because I remember saying that and things looked amazing. And then we went through a choppy period. And Dan and I had this conversation as to, hey, you know what? Things look so good here. Are they going to pull back a little bit? They did. And then, of course, the news, and that's the history. All right. Interest rates. I'll do spiders. God, you're so impatient. I know you want to get in the green room. All right. Interest rates still low, hanging down here. Right. So there's no indication that they're not going to cut interest rates based on looking at the, remember the old bull market end? Yeah. I hear you. 10-year keeps moving up. It's going to be interesting to see what these interest rates do in the coming weeks into next year. So spiders, there we go. Right. Gapping up a little bit above the high, just hanging there. You see that sideways action that occurred. I marked this off yesterday, and as prices wiggled yesterday, they gapped up and came down. That area that I pointed it out in the room at that point in time, that, hey, let's see if it begins to hold there. And of course it did. On the 5-minute, it pivoted and then retested and made its little move higher. So we know where it's opening, right? Opening up a little bit higher. Neither strike got hit yesterday, even with that big move. And this is the advantage of, picking an area you believe to be far enough away. Right? So this is today. Is it going to get up there today? Highly unlikely. If it was to get to 6,000, probably would stop, right? Just because it's a whole number. I mean, and it's not getting there in the morning for sure. Because everybody's going to be waiting for 2:00 and then 2:15, and then for the guy to start talking afterwards. So what his comments are going to be. So I doubt, again, neither one of these strikes are going to get hit. And if you blindly did these every day, they work without even thinking about it. The one that don't work, yeah, it's going to hurt. That's credit spread trading. No way around that. All right. Oil just continues to wiggle around. Could have been just the day, but oil stocks ripped yesterday. And I think waiting for a pullback, to getting in. They're at the top of the range here, getting into these, assuming they're going to continue to go up. Uh, Retailing moved yesterday. So again, maybe it was just, hey, buy everything, the shotgun approach. But retailing's done nothing for a year. And while the consumer's got debt up to its eyeballs, well, if this can break out from here into next year, this is going to be one of the opportunities. Um, Banking did tremendously well. There's up some resistance here. So a lot of good things happened yesterday for the country, for the stock market, people. And, we'll see how all of this shakes out in the coming days. But there's a lot of excellent patterns out there that need to do a little consolidation. So that choppy grinding period could still result in a little grinding here, but look, there's a tremendous amount of fantastic patterns that need to produce additional bars for us to act on. So in the coming weeks, I'm very encouraged as to where things will be going into next year and the end of the year here. So join the green room and empty lives and all the things that we do. All yours, Dan.
Good morning. Yeah, I've been spending a lot of time yesterday in the green room and in the video last night of, we're not going to be chasing extended patterns. I mean, you could, but with a big old stop and the type of patterns that I like better, which in a very simple, I'm going to show you FedEx in a very simple description. I want one igniting bar yesterday, close to support, close to the 20, obviously avoid. So something like this is a great new pattern. Alta, see, it's the igniting bar was here, but it's jiggling around. So that looks good for a directional up to 400 and a put spread. I posted a couple others. We did the sats yesterday. Alex gave us, you see my recipe, igniting bar, close to support, close to the 20, void. So as soon as he showed me that, bam, that's perfect what I'm looking for. Not something that is bad, far from the 20 in support. See, it's pretty simple. So I posted a couple that meet that. Iridium, here's another one I posted pre-market. Now it's a dog. It's showing relative weakness, but maybe it plays catch up for a swing trade. So I posted that yesterday's high, and I gave it a little big stop 3 bars ago. So that'd be what, Monday. Yeah, as Greg said, we got FOMC today. I personally don't think it's going to be a big thing. Pricing a quarter cut. What's his name? Logan? I don't know. Some prior Fed guy was on Fox Biz this morning, or Maria, whichever one, I forget, having a nice discussion. Yeah, it was Maria. Is the Fed screwing up again? Why are they cutting rates with the economy so strong? Why? He said they're saying, oh, well, it's an anticipation of a slowdown. Well, yeah, whatever. I'm not going to lose sleep over it. But
Leads
yeah,
to the question: is there going to be a slowdown after the election results, which is an unknown, but yeah, there's both sides of that argument. But if you believe things are going to continue to improve or get better because of the election, yes, why would you cut interest rates?
Right, unless, and the bond market yields are rising, as you talked about, so there's a big conflict there.
Well,
Um,
which raises the question: Is the bond is the yields going up because they believe, all of this talk about inflation and it's coming, so interest rates are going up for that reason, versus was the market, so the data that it was looking at, such a strong belief that Trump would win, that interest rates were going up because of a belief that there'd be a stronger demand for money. So that's the other reason why those go up. In addition, remember like a month ago, Dan, when the weekend videos, I'm explaining why isn't the dollar going down with the interest rates, short-term interest rates falling like that. So as I'm, in retrospect, reviewing the past, it's like were the markets somehow voting that it was going to be a Trump win. And maybe that's the reason the dollar wasn't going down at that time. I don't know, so we're just talking, as to, digesting the past month or so, and now, what's happened. So,
mhm.
you know, we'll see.
Shoot, not this state water. Dude, I typed the wrong thing in here. What was it? Elf. There you go, elf. All right, elf, not a state water. Um, yeah, no, I think it's, the inflation thing and deficit spending and, less demand for bonds, maybe our record, our stupid $36 trillion deficit, all that kind of stuff, I think is what's raising it also, not demand for money myself, but nobody knows the answer. All right, do y'all remember in the green room, we go through these earnings in the green room every day, starting around 3 o'clock, or when Sam gets back from Rick's, whichever occurs first. And we just had an MT live yesterday on big bars and tails. And Greg, remember we looked at a similar chart like this? It was a bottoming pattern that started out weak. And then I said, if it's negated, whereas this one's a little different, instead of starting weak, it's starting strong. And I said in the green room, if this gaps up a little bit over these recent highs, then this bottoming tail bar is a breakdown failure, 30-minute high, bottoming pattern breakout. And so that scenario, look, it's coming in a controlled manner. So far, market's not open. But this is a beautiful, beautiful potential gap breakout from bottoming pattern. This one's not earnings, but I saw it bottom right here. NTs, look at this 100% retracement. This one up on the China stimulus, all related stocks. This one's weaker because it's 100% retracement, but it's gapping over these bars. So this is why technical analysis works. I have no idea the fundamentals. I have no idea why it's gapping. I have no idea why it was retraced more than the others. I don't care. But now it's a bullish gap over this. So it meets my first test, the compelling gap with a compelling pattern. Second test, let's see what it does within the first 30 minutes. So I got, these are my two favorites right here so far. Elf and MTs. Said G, remember Sam? I did not like your $12 put idea on this. I mean, that's nasty pattern. Cody gapping down, 30-minute low is a short. Wolf 1060, nasty gap, will come back. Qualcomm, big old gap, controlled pullback, 182. Put spread idea. All right, cool. Yeah, but I know it's still Chinese though. Is my point. All the China stocks. Our APA put spread idea. ARM 139. I don't know. We got to come back. See, I'm looking for tier one setups, which I define as they're they're ripe for morning entry if it sets up the way I want in the first 30 minutes. All right, 67.40. Gap's too big, but on a pullback, put spread on Z Zulu and also his sister, Z Zulu Golf. APD alarm just went off for me. This is an earnings stock pre-market, and this is a buy setup. Yesterday's class, another range expansion bottoming tail, turn at the 50 with a void. So my 309 alarm went off right there. I put this in a window. So this looks great. Bumble, earnings. Oh, I saw it up a little bit pre-market. But if it can get over yesterday's high, you know what? I gave that as, wow, that's a crazy move. It just hit my alarm. All right, I gave that as a long call over yesterday's high. F-SLY, uh, gap breakout from a bottoming pattern. Elf, we talked about. Mitch is getting creamed. Wow, that's ugly. So, you know, Mitch is cousin of Bumble, just like Lyft and Uber. So Bumble is doing much better than Mitch today on earnings. 104 put spread on pullback. Hey, Don, I hope you didn't go out late last night celebrating because I need you today. There's a lot of gap and crappers potential for 1 DTE call spreads. This is one of them. See, it's up a lot far from the 20. Now you're gapping way the hell up here. 30-minute low, call spread. You know, I give that as a vanilla rule. The actual rule is, let's see what setup we get the first 30 minutes. Put spread if there's any juice. No prints, but nice little buy setup here. Igniting yesterday. C1, gap's too big. Potential. DPZ alarm. Let's watch a pullback. Churd bottoming pattern. 30-minute high maybe. Iridium triggered. No, Iridium did not trigger. Why did my alarm go off? Ah, I had an early one. Okay, hold on. 3061, I'll reset it. I had an early alarm. All right, I didn't get through all these obviously. D-Dog had earnings. I sold the 108 for 58 cents. And let's see, I got filled. I bid a penny or 2 pennies rather, and I got filled right at the market open. So I'm out of D-Dog. Out of D-Dog. All right, don't let me forget my tier one setups. ELF, buy 5-minute high, stop yesterday's low. That looks fantastic. And, you know, we'll do a half lot to start just because it's earnings and they can wobble around. Let's check put spread also done. On ELF, I'll do it. But that's a beautiful pattern. Vitali I had as a gap breakout. I have here's the other window. That APD I mentioned is ripping. Wow, I got a ton of alarms here. NTR was a buy setup. My alarm just went off over this 15-minute base, but nothing to do right now. Else. All right, now we're ready to hit. Oh, all right, look at NT's bottom right. It's giving it up. It's 932. So see, even on ELFs, you see why I just don't trade in the first. All right, the spreads are ludicrous. Well, actually, the 85s right now are 85 by 95. Those are the tightest right now for next week. And no, I did not post this as a put spread yet. I did FedEx and not FedEx, Ulta. Yeah, these 100s have, well, they just dropped. It was 85.95. Now it's 65.95. I should have just popped the 85. Now it's 55 bid. All right, shoot. All right, I'm gonna say half lot to go. The half lots to go now. Oh, 12.6. Money's here a little bit. All right, look at this. Oh, APD. See, another example of why I don't trade in the first 5 minutes. That was fantastic. But I don't like big old whippy tails. NT's. So NT's over the high now, I feel like. I'll set an alarm at 82 and ignore it for now. So done. Shoot, I didn't get through all those gap and crap candidates. Darn it. Um, net up alarm, which short. Oh, I might take my profit now. I shorted puts on this yesterday. Shorted the 75s. Wow, 75s and the 76s I shorted yesterday. All right, I'm gonna bid to close just one of them, and then keep the 76s. Right. So yeah, Alex, when you said, "Hey, why are you rushing into that?" This was on my list, not on my list from FinViz, whatever. All right, so the talent here was on my gap breakout list, but man, that was a gap and go. D-Dog is ripping here. Nice. This closes like this. It could be a 1, 2, 3 for next week. I mean, do y'all remember how much money the 108s were? It was like insane. And this is a real company. Um, Hey, Greg, another interesting point. Remember yesterday I talked about the weaker AD line that gapped down again and is only at 300.
Yeah,
So
it was kind of weird.
whole lot weaker than Q's are the best here in terms of holding the strength and moving up. Q's spiders, they still are acting in unison like they have been over the last something odd months. All right, Ulta was a go. Um, Put spread, I don't know if we're going to get filled. Let's see, this is what I posted pre-market. Delta 367 for next week. 367. 362. Midpoint is 35 cents, so there's no way we got filled. All right, so let's see. DPZ alarm went off. I'm just not crazy about the reward to risk of this, unless you're just day trading with a stop under 440. What's Bumble doing? All right, Bumble cancel, gapped over the entry, and now that's craziness. That's a crazy move. All right, so Iridium hit, Alta hit. Check Alpha again, put spread now. Then we can do the back half on 30-minute high. Elf 100s. All right, so they've tightened 75.90 now. I still would have been better popping the 85s when I saw them. It's a $5 wide for next week. We'll put 47 cents. You should be able to get 50. I'll keep an eye on it. Okta, we did a put spread yesterday, remember? Okta looks great. That's, another one kind of meets remember my strike zone, igniting bar close to support in the 20. I gave it only as a put spread, but now see that ain't bad even for a day trade. Look at this bullish 15-minute chart. Stop under 76. All right, we did the 75.71. Midpoint right now is 51. I will try 35 to get out of half, which is only going to happen on a nice rally. XBI. Remember I shorted naked puts yesterday? I'm up nicely on this. I did for my dad. So Greg, tell me, I was waiting for a pullback for ETF. But tell me what you think of this. I still like it better than that XLE entry.
Both need big stops. So
Right, but I like this monthly better as well.
and give it a weekly or monthly stop and share size.
Well, what's today? Thursday, it'd be Tuesday's low, of course.
Okay.
All right.
Like a placeholder, a quarter size position.
Well, I was gonna say a third. We've never done quarters.
Okay.
My positions. I still have ALN short puts. I have XBI short puts. I have net short puts. Octa put spread. XRT put spread. SMCI naked puts. So those are all mine. open positions. D-Dog, I cashed out of. Pelletier, I'm letting the put spread expire worthless, but that's why it's still in my position minor. XPH we're in the ETF, like I said, an alarm go off. So now raise it. 48. Pretty yeah. Health, we can do half an hour behind, 167. Oh, Steve, I looked at costs this morning actually because they reported the monthly sales. No, I would not. That's more bullish than bearish, Steve. So I only do condors if they're wide trading ranges. This is not. This is not. This is 100% retracement, downside shakeout. So I would only do the put spread sign. Provided there's enough juice. I would want to I would only want the 880s. No, forget that. My general rule is I want um, 10% of spread width. So that's nowhere near it. Like this iridium grid got smacked down. That was my concern. This is, it just looks like a dog. Ah, Netflix, nice. Yeah, we're in that and put spread. Yeah, looks good. All right, alpha alarm just hit. So back half is triggering. Let me check puts again. Sam, you ready for the morning question? Do you prefer buying your makeup from Elf or Ulta? Since we're trading both of them today, so that'd be appropriate question.
Does your chart on SMCI show another split?
Yeah. Well, that's what we called in the old days, Greg, an involuntary split.
The instinct will make a mistake. I don't know.
No,
Shows two in the last month.
no, that's they got their head chopped off. Split. And I can't believe my $13 puts are still 3 by 4 cents. Why? Why is this holding such crazy juice? Oh yeah, no, it's fresh. Right, right. So it's not ready. Exactly. It didn't trigger. But that does not mean that I'm going to take it off my list. You know why? Because tomorrow, if it gaps up to $18, we got a new gap and crap. Exactly. But let me go through earnings because there were a couple others there. I just didn't get around to them. Got filled on something here. No, FMCI. I bid for some and got filled. All right, so I'm done with that. All right. Oh, our sets looks fantastic. Let me see if I gave a full lot or half, 27.32. Yep, we gave half, so let's add half. Yeah, thanks. Yeah, I got that in the history here. This is a company, Alex, that makes the SAT scores for colleges and universities. I don't know if you knew that or not. Hmm, 33. All right, our Zoom here, for you people who don't get our telegrams, which is assumption of the risk. Here's what I did on Zoom pre-market. It's up so much and we capped our gain at 77. So just let them have it. We'll look for a new setup. Oh, even Metadog. I'm having a nice morning here. That's a nice reversal pattern at the 50. Again, yesterday's class took out the low, range expansion, void. Wow, I didn't pay attention to this, but look at the pre-market also. That would have been a day trade long. That looked good. All right, now let's see if there's any puts I can sell. Even the 110s for tomorrow. 55 cents. Ain't bad. That's a 0.5% instead of my 1%. Right, Sam? Where I say, yeah, but you got to put it into perspective. It expires tomorrow instead of next week. Wow, they suck the juice out of these. Well, I would be at over 50% of max profit already had I hit that 80 or 80 95 bid, whatever it was this morning. Now it's 40 cents. Dude, but yeah, Elf was one of my favorite setups this morning, as you all know. Yeah, no, it was good. It was an igniting breakout close to the 20. I just didn't like the stop under Tuesday's low was all, but I liked it. Looks fair. Let me look at this sizzle. I would have posted this today, but it has earnings after the bill. And W, all right, I'm gonna cancel that. I gave this as a put spread, but I didn't see the gap down. So let's cancel this. Ah, FedEx. Ah, FedEx hit. I missed my, or maybe I didn't. Yeah, I forgot to set an alarm, but FedEx triggered too. 281.22. Yeah, I actually like that though, Don. I like that the friggin' herd can think instead of just following each other like a stupid herd does. Bunch of sheep. I was gonna post FedEx as a put spread also, but the juice was under 50. So that's why. Oh, the news said that Biden, he wakes up at 10:30 every day as a general rule. So at 11 o'clock, he's going to talk about Trump. I love Damala's concession speech yesterday. Yeah, I admit he won, but that's not going to stop me from pursuing my shit ass policies and in the court and on the street and wherever else I can. I know I was John, you know what I was just about to say? you beat me. You know what I was just gonna say, Don? I was about to say, "Whoa, Don, that's it. Don't start on me." You're funny, you know me. But Don, in all seriousness, you owe Alex, Greg, and me a thank you. And you, I mean, I know you know why, but do you want me to remind you? It's because we did not rub it. We did not rub it in your face yesterday about Trump. We kept it very professional in here. Did you notice that? You know, it's like when you get a knockout, then it's like, everybody knows. So I'm not going to rub it in your face. But yeah, no, I consciously didn't want to talk much politics yesterday. All right, where was I? Earnings here. Let's go through. Iridium. Look at you, piece of garbage. MTZ. I forget, John. I think that was you mentioned that yesterday. Greg, your target. See, it's a bullish market. So careful in shorts. This it's been on our list for a while. Look at what do you think of GWRE, Greg? But the stop has to be Tuesday's low. Pizza Hut. I'm just not chasing it. I said G bounce. So my hey, bounce some bottom fishers. Cody, I said looks like garbage, but no entry. Wolf still looks horrible. That's a big old percent gap. Hey, Qualcomm might set up for a 1 DTE put spread. We're getting a 15-minute buy setup here, including pre-market data. Let me take a little look. It would have to be the 170s. 40 by 55. But that will not be enough for a spread. Wow, I had this as a put spread idea and that collapsed. Wow. Wow, that was an amazing. I was hoping to get a controlled pullback, kind of like Qualcomm. Fumble to volatile, half slide to extended. Elk we're in. That was my favorite long today. Mitch is in pain. Man, look at that gap. Wow. So Don, we should put this on our list with the hope, that it rallies 3 more days and possibly even goes up to $300. But that's so far from the 20. But there's zero pattern to short that right now. But all right, this one would have been on my gap and crap list. Yeah, but I didn't get around to writing them all down. Golf Hotel.